People are slowly joining as usual. We will take 2 or 3 minutes before we head right into it and get started with the webinar. But thanks already for joining us today. Once again, hello everybody. For those who have joined within the last 20 seconds, we're going to wait another minute or so. We have more and more people joining by the minute, so please be patient for a little while. All right, so we have a lot to cover today. We have 4 fantastic speakers, so let's go right into it. First of all, good afternoon, everyone, assuming everybody is in the Eurozone. Um, Very excited to welcome you to this webinar or panel discussion about the beautiful country of Ethiopia. The main topic will be its trends and opportunities, so a very forward-looking webinar we have today. Ethiopia has had, similar to the entire world, and especially the coffee world, has had some difficult years that we're also looking back on the last 2 or 3 years with all its stakeholders being involved. We had delays in shipment, we have quality issues, we have extreme poverty in the coffee growing region still going on today, volatile prices, defaults, etc. I could go on and on. We would like to discuss about these issues today. But also paint a positive picture about the future of well, the country of origin of coffee. Before we introduce our speakers today, just a little bit of homework, a few disclaimers. A lot of you have been already on calls like this, so a bit of a redundance. But anyway, this webinar will be recorded, will be put on YouTube, as always, part of our YouTube channel in a couple of days. The presentations will also be available. The most important thing about today, this is a webinar, but the presentations are going to be rather short. It should be more of a panel discussion. So we have, as I said, 4 fantastic speakers today who are happy to answer your questions. So the Q&A is enabled. Please use it as much as possible. We need great questions to facilitate the discussion. Now, speaking of the speakers, let me introduce them to you in order of presenting. We have Phil Schlüter, who is the managing director at Kovoya, who will cover the trader's view today. We have our dear Abdullah Bagash, who is the managing director and owner of the very well-respected coffee exporter from Ethiopia, namely Bagash as well. And we have Catherine and Paul joining from TechnoServe. I don't think I have to tell you who TechnoServe is, a very well-known company, and thanks you guys for joining. But now, without further ado, let's jump right into it. And Paul, I'm going to be sharing my screen now. The stage is yours.
Great. I think you meant Phil, not Paul there, but
oh, exactly. Both with a P.
Great.
I'm sorry.
Yeah.
Very similar. Go ahead.
Thanks very much, Max. Yeah, it's a great honor to be able to present on this. I'm increasingly aware that I am the past generation, not the next generation in coffee. And it's inspiring to see what the next generation is doing and the way they're pushing the industry forward. I think all of us on this panel would say every day is a school day in coffee. So great to be learning each day as we go. Next slide. I'll start with a couple of photos from Ethiopia for anyone who's not been there. I think people often view it as quite an arid country, and it's anything but. It's an absolutely stunning country with many different landscapes and vistas. The top photo is taken at about 3,000 meters between Nazaret and Gololcha, which is in western Harar. So going slightly south from Addis and then out towards and it is a country steeped in coffee history. On to the next. Just a few more photos to start with. The top one shows different varietals in Jägershefe. Both coffees there are ripe. So whilst we see it as a country that has primarily Typica or heirloom varietal with its very distinctive flavors, there are differences within the country. You have the Great Rift Valley running through it, the top right photo, which is absolutely stunning. The bottom left is the Adagash Lodge. If you want to travel and visit, there's some amazing places to stay in Ethiopia now, well worth a visit. Right, this, if you click play at the bottom, there's no sound to this. This is a cine film taken in 1952 by my grandfather. This is Addis Airport at the time, so some things have changed quite dramatically in Ethiopia. If you go there now, there's a brand new airport in Addis, and every time I go to Addis, there's new buildings, new hotels. Quite glitzy this time I went. The coffee scene has not changed in many rural areas. I've got video footage from the 50s that looks exactly the same as it does today. And as you'll see in a second on this video, the trees generally are fairly unique, like they are there. They're extremely tall. Some of them are 10, 12 feet tall, quite spindly, and there's very little pruning done. So it's fairly unique. A lot of it is forest grown. Almost all of it is smallholder. There are some estates now, and that's an increasing trend. But it's an incredible place to visit and a place where we do rely on millions of smallholders who both produce coffee and drink coffee themselves. Can go on to the next slide. I think that video is pretty much finished. Thanks. You will see numerous maps of Ethiopian coffee. If you Google it, you will find many by friendly competitors of ours as well as ours. In the past, there's a lot of very good maps of Ethiopian coffee. I encourage you, if you're not familiar with Ethiopia, just to Google Ethiopia coffee map. You'll find many. We used to look at 3 or 4 regions in Ethiopia, and now the coffee is listed in the minimum prices by the ECX in about 40 or 50 regions. So I've tried to summarize here. You'll see that the exported quantity in bags is about 4 million bags a year. The estimated production is anywhere from about 8 to 12 million bags. For the sake of simplicity here, I've simply doubled the exported productions from the latest figures we have. But you'll see that Sidamo and Lekemti produce export about 1 million bags each. Jim and Jägershefe about 500,000, and Guji and Limu about 250,000. It's an easy way to remember the numbers. I put some flavor notes. It's really hard to summarize the multitude of flavors in Ethiopian coffees, but in broad terms, the washed coffees are very well known for their floral flavors, lavender, rosewater. If you drink tea, a little bit like Earl Grey tea, and the natural coffees are known for their stone fruit flavors, so plums, apricots, peaches, and so on. The coffees in the south have the most intense flavors, so that's Jägershefe, Sidamo, Guji. And then you find, slightly different flavor profiles in the west. Harar was very famous for a very distinct blueberry flavor, and before we had grade 1s from elsewhere, was really the top specialty coffee that people looked for. Now it's hard to find a good Harar, I have to say. If you've got one, then you're lucky. I say it's an oft-forgotten origin when I look at the amount that large trade houses or large roasters invest in Ethiopia compared to other countries. It always seems very little. This is just Arabica production, very broad figures again, but if Brazil has 50 million bags and Colombia 13, and you look at the amount of investment and time and effort put into those two origins, and then you compare it to Ethiopia, which has 8, possibly more, in terms of production, it's very little. And if we were able to increase yields, which we'll discuss later on, in Ethiopia, we could quite easily get 15, even 20 million bags of production in Ethiopia. So I think it's an origin that really should have more focus and has more potential than people give it credit for. Okay, a quick look at the costing as a trader or the value chain in Ethiopia. I generally find it as a buyer or trader quite useful to do a quick calculation at the beginning of the season, which takes into account the foreign exchange rate at the time. The current rate is 56 birr to the dollar. That's the official exchange rate. The black market is over 100. But if we take 1 birr per kilo of red cherry and we say that you need to buy 6,050 kilos of red cherry to get a kilo of green coffee, you would take 6,050 divided by 56. That's $108 per ton of green coffee for every birr per kilo of red cherry. Divide that by 22.0462, you get 4.9. So that would be the number for this season. If somebody quotes to you that cherry price today is 30 birr per kilo of red cherry, you can simply take 30, multiply it by this season's multiplier, which is 4.9. That will tell you that farmer price is 147 cents per pound. If it's 60, it's obviously double. So that's a useful thing to do at the beginning of each Ethiopian season if you're a buyer in the trade. Farmer prices are very high in Ethiopia, the highest, I think, anywhere in the world in terms of large volume, and yet farmers are still relatively poor. Wet mill costs, we used to have a formula that it was 10 cents plus 20 cents divided by the number of containers you put through your wet mill. That seemed to work consistently across East Africa pre-COVID. I think that number is probably now 14 cents as a variable cost plus 28 divided by the number of containers you put through your wet mill. I need more numbers to see if that runs fully true across East Africa, but as a broad rule of thumb, that works. You can see wet mill costs in the region of 20 cents. Krabbies are the name given to all local operators who are dealing with smallholder farmers, whether they're running a wet mill or collecting dried cherries for grade 4, 5 or sun-dried coffees. They typically look for a 10% margin. Whether they make it or not depends on the season. Dry mill and export costs about 11 cents, and costs added to FOB are about 3. I put a large question mark for exporter margins, and that is because Ethiopia's a somewhat unique origin, that a lot of the coffee is exported at a loss, and that is because there is a real lack of US dollar currency and has been for many years in Ethiopia, and therefore many exporters are exporting coffee in order to get dollars with which they can buy import goods, on which they can make 50% margins when they resell them. If you look at it from a very broad perspective, it is a little bit tax on the city dwellers who tend to buy most of the imported goods, and it's giving higher prices to smallholder farmers who are in the rural areas, and therefore is not entirely a bad thing, but it is fairly unique. I'll move on to the next slide. This is simply taking the minimum price published by the government each week, which comes out on a Tuesday. It's come out just before I started this call, against New York, and plotting the two together. I know that there's been more volatility and differentials globally in all origins over the last 12, 24 months than usual, but Ethiopia is particularly unique in the volatility in its differentials on a daily, weekly basis. And that's because nobody in the internal market is hedged. Ethiopia, again, fairly uniquely, does not allow any multinational companies to buy coffee from farmers or do the internal trading of coffee. So all exports are done by Ethiopians. I personally like it. I think it's great. Means you have a great wealth of knowledge and expertise in coffee within Ethiopia, which means traders have to buy on an FOB basis. We can go on to the next slide. That means if New York jumps 6 cents this afternoon, the differential for all Ethiopian coffees will drop by 6 cents because they will not move the local price. If it goes up another 6 cents tomorrow, you may find exporters move their price up by 1 or 2 cents, but given that they're not hedged, they're mostly keen to get sales in the book and export dollars, and therefore the differential will move as New York moves. So the local price is a slow moving curve and New York is a fast moving curve. I believe it is quite sensible to buy Ethiopian coffee through the trade. As I'll mention again on the next slide, if you want to buy it direct as a roaster, you need to open a letter of credit. Sorry, let's go back. Sorry, one more back to the previous slide briefly. If you look at this chart, the Sidamo 2 price, that's the local price in cents per pound FOB, barely moves from 274 to 277. If you are trying to buy it as a roaster direct, you will typically be trying to buy it when the local price is at the cheapest level during the season. if you are buying it as a trader, you typically buy it when the local price is at its highest level during the season, which corresponds with a spike in New York. But your differential when you're buying it will be cheaper than when somebody tries to buy it direct. So if you are a roaster who buys on differential, or even who wants to buy on outright, you are often better to buy it through the trade. The trade will often offer it to you at a cheaper price than local exporters. And when they're buying to cover, they will be paying a higher price locally than you would be paying if you want to buy it direct. If that's not very clear, people can ask questions on that later. Another thing we've seen in Ethiopia, particularly over the last 10 years, is the rise of grade 1. So grade 1 didn't exist. When I started trading Ethiopian coffee, I believe we were the first people to buy some with BNT in Ethiopia about 20 years ago now. But the proportion of coffee being exported as grade 1 to the specialty industry has increased, as you can see in this graph, from about 4% and is now just under 20%. Most of that coffee, this is only washed coffee on this graph, is coming out of grade 2. And it's the same that we're seeing in other origins. If you take Kenya ABFAQ, it doesn't taste like it did 10, 15 years ago before the specialty industry took off. So you've basically taken the best cupping 20% of Sidamo washed grade 2 and exported it as grade 1, and the coffee left to be exported as grade 2 doesn't have the same intensity of floral flavors that you would have expected in the past, because the best have been exported as grade 1. Just a quick run again. I know we have little time on the unique challenges of Ethiopia, so no multinationals. A lot of exporters, I think Abdallah will probably speak more about that, but there are many exporters doing exports of coffee simply to get Forex. So I think it's important to know who you're dealing with, and are they really coffee people, coffee exporters, coffee experts, or are they simply exporting you dollars, coffee to get dollars to import goods? The government requires a letter of credit for all purchases so they can track the dollars coming into the country, particularly with the war in Tigray and the extreme lack of dollars. They've reduced the amount of dollars. If you export $100,000 worth of coffee, you used to be able to keep 50% as the exporter to use for importers. For imports, that dropped to 20%. It's gradually increasing again, but it is a major part of the local trade. Shipping, Ethiopia doesn't have a port. The term Mocha comes from the port on the other side of the waters in Yemen, where most Ethiopian coffee used to transit through in the past. Hence, the term mocha is often used referring to Ethiopian coffee for the chocolate flavor you get, particularly in the sun-dried coffees. But that's a real issue that currently the shipping port is Djibouti, and I'm sure that will come up in questions. I also find that the language barrier is perhaps a bit larger in Ethiopia than it is with other exporting countries. Amharic is a very difficult language to learn as a buyer. I only know a few words myself, and a lot of Ethiopian export managers only speak a few words of English, so communication can be a little harder in Ethiopia than it is in other countries. I think there's plenty of time for questions at the end. I think I have one more slide. This is just to show the increase in exports. So up to at 4 million on the last slide, there's 5 million on this. The exports are increasing each year. The quality we see globally is improving every year. Last year was particularly challenging for the grade 4, grade 5 coffees due to heavy rains and extremely high cherry prices. When you go to Addis and travel around the country, you can see improvements in infrastructure all the time. It was only announced yesterday that a local company called Faris is planning to launch a satellite into space from Ethiopian soil in the next 2 years. So you can see very fast development. I think the economic growth in Ethiopia has been double digits for most of the last decade. So there's masses to be done in the future. So the next generation for whom this call is done have a lot to look forward to. I will end there and happily answer questions.
Thank you, Phil.
Later in the session.
Much appreciated. Abdullah, you can start now.
Okay, thank you very much. I hope you can hear me. Good afternoon, everyone. welcome to this webinar, which hopefully will shed some light on what's been going on in Ethiopia the last couple of years. Next slide. So I think this audience probably knows really well about the position of Ethiopia in the coffee world. We're the birthplace of Arabica coffee. And this has endowed us with many biodiversities and varieties of coffees, which grow all over the western part of the country, down to the southern portions and all the way to the east in the Harar region. Phil has explained several things, but mainly what has been happening over the last decades, let's say 50, 60 years of organized coffee export from the country, was that the volumes that mainly went out of Ethiopia were unwashed coffees. And Harar was, let's say, one of the few special brands and special flavors that came out of Ethiopia. And the rest of the regions were mainly unwashed coffees that were coming out. But over the last 20 years, with the move towards specialty coffee, I think people realized that Sidamo, which normally was a province about 30 years ago, which had encompassed Sidama, Yirga Jaffe, and Guji, were all in the Sidamo province. And therefore, the Sidamo profile that people buy was identified on those southern sweet coffees that were coming out as the Sidamo coffee. And then about 40, 50 years ago, washing of coffees started in East Africa. And the really high-end flavors of this region started coming out. And then the identification of Yirga Jaffe as maybe a specialized sub-region. But now when you look at the trend, we see that almost all the Ethiopian coffee regions, I mean, if you look at the south, we have Guji, which is now bona fide, its own region with its own flavor profiles. And then when you go within the Guji region, there's many sub-regions, and each one is different, has a different terroir, and therefore a different flavor profile. What we have seen with the specialty movement is that only when you start processing coffees with very high-end cherries do you start getting the terroirs or the flavors of that area to come out. And now the move is that there's a lot of washing stations in the south. Of course, there are many in the western part also, but the south is where, let's say, the original high-end washed coffees came out and then were crowned by the Yirga Jaffe flavors and Yirga Jaffe profiles. But now when you buy coffees, it's not enough to say Sidamo. You would want to have a sub nomenclature that identify where exactly that coffee is coming from. I think it helps the buyers with their marketing. It's useful for that, but also it goes well in hand with the trend that something special, you need to know where its source is from, and then you therefore would want to know what the culture is in that area and who the farmers are and what the tree and the landscape looks like. 4 years ago, the first Cup of Excellence competitions and auctions were held in Ethiopia, and they really manifested in really very high quality coffees coming out, because they were vetted by many cuppers to grade them properly, and routine scores in the 90s was quite possible and was seen, and for the first time hundreds of dollars per pound were paid for Ethiopian coffees, some of them absolutely well deserved. although at the end it's the spearhead effect that was happening with that. Next slide. As I mentioned, we have the different previous slide, please. No, next slide now. Thank you. So the different regions, as I explained a bit earlier, is that we have the southern coffees starting from Sidamo down to Yirga Jaffe area, Gedio, and then further southwest to Guji. And then in the western part, you have starting with the Legamti or Wallagga coffees, and then down to from Ilubabur to Wallagga, and then to the Jimma, Limmu areas, Kafa, and then the Teppi and Benchmaji's coffees in the far southwest of the country. The different categorizations of these coffees, of course, as I spoke earlier about the specialty, you would get high-end specialty coffees in any of these areas, as long as the cherries were prepared in a very high quality way, and of course, the washing of coffees actually eliminated a lot of the risk with the unwashed processing, and that was the actual benefit and intention of the washing process, was to eliminate the variability in the natural coffees and the risks with the natural coffees. But then we have come into a full circle over the last 20 years, and where our company made the very first high-end natural coffees from Idido, and we branded it as Misty Valley, and it was a new way of looking at coffees, which brought out the fact that the natural coffees were not inferior. In fact, with the right processing, they could be very competitive with the very elegant washed coffees that you would get, as Phil said, with the grade 1 specially selected washed coffees. But of course, at the bottom of the pyramid, you would have the commercial coffees, and a lot of these coffees which are traded within Ethiopia through the unwashed or cherry Jemfel, which is called Jemfel in Amharic, the cherry trade, where the farmers dry their own cherries and keep them sort of as a small bank account where they could sell the cherry coffees throughout the year. Typically, the ripe cherries would go to the washing stations during the harvesting season and the washing season, which is typically in the September to January, and then after that the dry season trading begins. And a big portion of Ethiopia's exports, I would say almost 50%, is the commercial unwashed coffees, spearheaded by, let's say, the Legamti grade 5, which most of Europe knows, and the Sidamo grade 4s, and of course the Jimma grade 5, which is a foundational coffee for blends, and still has that mocha character that is unique to Ethiopia. What we've been seeing also is that there is the segmentation going up to the very high-end specialty coffees, where you go into, let's say, more premium natural coffees, and then and also the washed coffees also go through their phases. Some of them ending up in the very high-end grade 1 specialty sector, but the others fall into a washed standard washed Sidamo, which is quite famous and one of the most famous coffees that's used highly in Europe and other countries. Next slide. So I think if we look at the last couple of years, everywhere I went, I was hearing about the challenges with Ethiopian coffees. And maybe in the next couple of slides, I'll try to explain just a little bit of what we are seeing here on the ground and what may have caused some of the challenges that we faced. I think in 2020, by the way, we're just coming out of a 2-year war in the north, and that had already affected our economy substantially, which is then reflected by the extreme shortage of foreign currency. And as Phil mentioned earlier, in an unparalleled situation, we're seeing our official exchange rate and our parallel exchange rate being double, the parallel being double of the official rate. And this has caused a lot of stress in terms of pricing and why Ethiopia's coffee prices seem to be exaggerated sometimes. And then this background was exacerbated by the fact that in the last 2 years, we also had, let's say, a type of liberalization of the coffee supply chain, where, as you all know, for the last 60 years, our coffees were very much centralized, and coffee was going through the auction system and then into the ECX. And only in the last 3 years was a loosening of this very tight chain, and with vertical integration, something which had been very much in demand and desirable. But unfortunately, the way the timing and the sequence of events made it one of the reasons maybe that a bit of the challenges that we saw. And this is explained by the fact that when the vertical integration happened, it was also at the same time when many new coffee exporters came in with the intention of only getting dollars from the coffee, and therefore without the proper background of in understanding quality and also pricing. And therefore the vertically integrated supply chain was extremely open for a high competition in terms of prices. And as you well know, when prices are, the competition is very high, usually quality degrades because the receivers of the coffee, the exporters, were willing to receive any kind of quality as long as it was coffee. At the same time, adding fuel to the fire, the world market was at levels not seen in the last 15 years. So this was creating a sort of panic also in terms of the buying. And again, the shortage of foreign currency, just to give you an indication, for the last 30 years, the standard number of exporters has been about 150. In the last 2-3 years, we shot up to about 2,000 licensed exporters. So this was a recipe for the extreme competition and therefore a degradation in quality. And many of the exporters did not have the means of negotiating properly for the right price and the right quality, and so this left the system open for a lot of delivery defaults and quality defaults internally, which then reflected itself in the world market, where a lot of international buyers were faced with quality issues from Ethiopia on the especially the commercial G4 and G5 categories. Next slide, please. So that was the last 2 years. What are our challenges in 2024? Of course, it felt to us like it was facing one new challenge after the other, but the really big challenge that came was the EUDR regulation, and the lack of clarity of the implementation caused us a lot of problems at the beginning of the season, which is, let's say, usually November, December, when a lot of coffee was able to be sold, but due to the regulations, we missed a part of the market, let's say, during that time. To the credit of the government and our regulators and the Coffee and Tea Authority, I think part of the challenge we faced as a country was also the very high inflation, again due to the effects of the war and the inflationary environment all over the world, which also seeped into our economy, and therefore to combat the inflation, which was affecting the livelihoods of 120 million people, very tight currency and credit limits were set by the government to ease, and this has been a very effective way of cooling down the inflation in our economy, so that people have a better chance of survival. This challenged a little bit exporters who were accustomed to very loose credit situations, which also was the reason why the prices were going out of control in the panic and the desire for factories and companies that needed inputs with their foreign currency to be able to cover that. So the tightening of credit limits seems to have calmed down prices. We're also seeing shrinking differentials in the world market, which is causing a bit a lack of demand for our washed coffee, which are usually at a slightly firmer differentials. And then, of course, as if all of that was not enough, we have the shipping challenges due to the Red Sea politics and the things happening there, which slowed down the availability of containers. And again, all of these were a severe headache for all of us as a country and as exporters, trying to get the coffees out from the new crop. So it continues. Next page, please. So the outlook for 2024, from my point of view, is that again, due to the government controls in calming down the economy, has caused some issues in liquidity. This probably would reflect in slightly less coffees being washed, because not all the washing stations were able to get sufficient financing. The natural coffee supply, which we saw degraded very much in the last couple of years, seems to be improving. So that is giving us some hope that over the next months, we should be able to do some decent, good quality business in the unwashed coffee sector. Prices in the internal market also don't seem as exorbitant as they did in the last couple of years. And usually when things go right in the interior, then they reflect to the exporter and to the world market. Quality seems to be improved. The lower prices, again, I never believed many years ago when experienced people told me that sometimes when coffee prices go up, that quality comes down. But then now I believe it, because we saw it very much as the prices went up. People were trying to just put together any coffee to fulfill their contracts, and therefore the quality was compromised. So now with the local prices being a bit calmer, we're seeing some the qualities improve. Also, as Phil mentioned, there were some rain issues in the west and some parts of the country last year, which caused a lot of the musty cups and the degradation in the quality on the naturals. And this year it seems to be better, and we're hoping that it will continue that way. What we're also seeing that everyone got burnt in one way or another, and that the international coffee buyers are ramping up their due diligence when selecting who they're buying coffee from, because of the risk in deliveries and the qualities. EUDR, again, over the last few weeks, a lot of efforts from our government, the Coffee Tea Authority and other government institutions have been very actively working with the EU, and they seem to be making a good headway in trying to find a solution for how Ethiopia resolve this question, which has been very, very much difficult because of the large number of smallholder farmers. We have at least 5 million farmers, and so trying to meet the EUDR requirements of tagging each farmer and so on seemed like almost an impossible task. And therefore, we're very glad that the EU is open to a territorial approach in terms of coming with short-term solutions. And what I hear and see from our government, that they're on high alert and working very strongly to propose to the EU, as per their request, a solution from our side on how to do this, and hopefully it will give us some breathing space until some more clarity on how we should deal with the 5 million farmers becomes clear. But until then, we do have a system where traceability is followed through the district level and so on, and those may be used as units of control for the deforestation issue. Our specialty market is growing quite nicely. New markets such as China and the Middle East are really taking and becoming very aware of the very high qualities of Ethiopia. And so that market is moving in a healthy way. Next slide, please. And to conclude, it looks to me that should be a better price quality year. It's not exactly right because it may not be exactly at the right timing because, as Phil mentioned, we're an outright country and the world is more or less a differential operator, and therefore we need the trading houses to be the translator where they take our outright prices and convert them into differentials. So with this situation and the volatility in the market, it should create some good buying opportunities for the buying markets, and therefore the price quality balance, which I mentioned. Exporters are very cautious and trying to manage their risk because of the damages and challenges of the last couple of years. As a country, we're facing head-on the EUDR challenge, and I feel very confident that it's being treated and handled in the right way. And we're shipping coffee out there. I'm getting bills of lading the last few weeks, so I'm not totally depressed by that situation. And I hope sooner than later the bigger powers will figure a way of getting peace throughout this world, so we can do our business. With that, thank you very much.
Thank you very much, Abdullah. Very much appreciated. And we now move on to Catherine and Paul. Please try and be a bit brief. We're a little bit behind schedule, so we have some time for questions. So you may start.
Great, thanks very much. I will just start off, and then I'll hand over to Catherine, who will handle the majority of the presentation. Our focus is going to be more at the farmer level, and we thought you might find that quite interesting. Phil really helped with that great video. It was amazing just seeing some of those old trees back in the 1950s, those huge, huge trees. And this photo actually shows you what the base of many of those trees look like. Looks very different from what you will see in other coffee producing countries, where in some cases you have many stems. But really the key thing that makes Ethiopia very different is that those stems are really old. We see trees often that were maybe planted in the 1960s, even before, and they've never been rejuvenated. They just have those same stems, and as a result, there's a real need for stumping the coffee. So Catherine's going to be telling us a little bit about the work that we've been doing with farmers to help to stump the trees. If we go to the next slide. I'll just begin by giving a very brief overview of some of the work that we've been doing in Ethiopia over the last 15 years, just to give you an idea of some of the opportunities really that there are in Ethiopia to really help farmers become more profitable and to really adopt regenerative practices. So the first lever that we've really been focusing on is better farming. So we've been training farmers. We have this 2-year coffee farm college training program that we've rolled out across many different areas of Ethiopia. We've now trained over 400,000 smallholder farmers over the last 15 years. And as Abdullah said, there are about 5 million farmers. So we still have a long way to go. And Catherine will share a little bit later about the work we're doing there. Better processing was also great. Abdullah and Phil both mentioned the the shift from natural to fully washed coffees in many areas over time. One of the areas about 15 years ago we really focused on was Jima, Limu, where there was very, very little fully washed coffee from those areas at that time. We supported about 100 cooperatives to set up new coffee washing stations. Many of whom are really successful. You might have heard some of the names like Duramina, which is some of these cooperatives are really multi-million-dollar businesses now and are really successful and getting farmers, much higher prices. Third lever that we've been focusing on is better supply chain. So there are many different parts of that. There's some digital technology work we've been piloting, even related to EUDR, but we don't have time to get into that today. But one other thing that we've done in Ethiopia recently is we've helped the Ethiopia Coffee and Tea Authority, the government regulator, to write a really comprehensive 15-year industry strategy to really help them and together with the private sector, really come up with a really clear strategy for the industry over the coming years. And then the final lever that we see for really, helping farmers become more successful is around environmental and social standards. And this photo shows you a vetiver wetland. We've helped about almost 150 coffee washing stations, particularly focusing in like the Sidamo, those more traditional areas, to set up these vetiver wetlands to reduce the amount of pollution that has been going into rivers and waterways. And I think we calculated a few years ago that we had reduced the amount of pollution going into these rivers by 300 Olympic-sized swimming pools per year, so fairly significant. If we go to the next slide, just before I hand over to Catherine to speak more about the stumping work, I wanted just to tell you a very brief story about how to become a profitable, climate-positive, nature-positive coffee farmer in Ethiopia. And this is the story of Fadila and Mustafa. They're a couple who I met a couple of years ago who had actually attended some of TechnoServe's first farmer training 10 years ago in 2013, 2014. And they learned a lot of new practices that they didn't know before. They quickly adopted some of those practices, like how to make compost, which they weren't familiar with, erosion control, some of these very important basic practices. And one of the practices they learned about was stumping. And during those 2 years of training, they didn't stump a single tree. And that's quite understandable. Stumping a tree means taking it out of production for a year. And really, farmers are afraid, like, is it actually going to grow back? But they saw some of the trees that were stumped in the demonstration plot as part of the training grow back over the next couple of years. And as a result, immediately following the training, seeing the great impact, they stumped some of their trees. And when I spoke to Fadila and asked her, what difference that made, she explained to me that before they attended the training, they had an average size farm for Sidamo, about half a hectare, and she was harvesting about 200 kilos of cherry from her farm. So 200 kilos of cherry, that's like 30 kilos of green coffee, not very much coffee. And she told me she could harvest it all herself. And obviously that's going to earn her maybe 150 maximum in a good year, $200 a year. It's nothing, it's really, they were living in absolute poverty, as coffee was really their only source of cash income. But after they had stumped the trees, 3 years after completing the stumping, when the trees were back in full production, they harvested 23 times more coffee. They were getting about 3.4 kilos of cherry per tree. So that works out about 750 kilos of green coffee, or 1.5 tons per hectare. So really high productivity. That's without applying any fertilizer. So that was almost all profit. And with that extra income that they're now earning from their coffee, they bought 3 cows, which are producing milk. And they're now employing 3 permanent staff to help them on their farm. And they have educated their 2 children. One is now a doctor, and the other has a job at the local hospital. And so this is a story of how farmers can become not just profitable, but climate positive, because those trees are, they're producing so much more coffee. So actually, the greenhouse gas emissions per ton of coffee from that farm now has plummeted, and then it's nature positive because they've planted more shade trees on their farm, and that's really supporting the biodiversity of their farm. So with that, I'll hand over to Catherine, who will share a little bit more about getting into the details of how we've done that.
Thank you, Paul, and hi, everyone. So just picking up from where Paul has left. So this is the pictures you can see here is the same trees. One with very old trees, and then the second one is the same trees 3 years later. So these are trees that have gone through stamping. Just go back to this. Yeah, thank you. So these trees have gone through stamping, and stamping is basically cutting the trees and letting them regrow. And as you can see from that photo, the unstamped old trees are giving 1 kilogram of cherry per tree, or barely 1 kilogram. And then stamping 3 years later, you get 3 kilos per tree. Next slide. And so comparing 1 kilo and 3 kilos of cherry, really, you can see that a higher tree yields can enable farmers to achieve a living income. And we did studies and analysis a few years ago to really establish where the farmers are at in terms of their earnings from coffee, and the potential of where they could be if they made their coffee look like what you've just seen by stamping coffee to earn much more. And as you can see from this illustration, the baseline is at $385 per year, what they earn, against a living income benchmark of around 1,488, close to that. But stamping could increase their income 3-fold, and this means that their potential income could be $1,200 per year. And then that, coupled with earnings from the other crops, could really boost their income, and they could go way above the living income benchmark to close to 1,700. Now, just imagine if the prices increased a little bit more. Just a click, Mark. It means that with the higher increase of prices like we have experienced between 2021 and 2022, then just at the baseline, farmers could earn $180 more. And with stamping of coffee and other best agricultural practices added, then they could add an extra $500 to their potential income. Next slide. So the question is, what has been hindering farmers from stamping? Basically, stamping, as Paul mentioned, sets you behind 1 year. So you lose, when farmers stamp, they lose 1 year of yields, but then they are able to revamp that and get much more 3 years later. But then convincing farmers to stamp is not an easy job. It requires training, but in addition to training, it requires incentives. So over the last couple of years, we've tried different ways of combining incentives to encourage farmers to stamp. And over time, we have seen that training coupled with incentives can increase adoption by 35 times. The photo you see there is of a farmer who has received incentive of a wheelbarrow for stamping a certain number of trees. So currently we work with a threshold of 50 and above trees for a farmer to be able to get something. Now, one thing we need to understand is that training alone still enables farmers to stamp, but not enough. When you couple it with incentives, then you get over 35 times. Incentives alone may not do much because farmers need to learn how to do the work. So we run hundreds of demonstration plots where farmers learn how to take care of their coffee. They do it practically, and then from there, they are able to see the demo plots evolve, demo plots change, and then they are able to practice that in their farms. Next slide. And so what we have seen is a one-time investment in training and stamping. Incentives unlocks long-term benefits. Now, in the last 2 years, 2022, 2023, together with our partners, we supported farmers to stamp through training, and over 30,000 farms stamped about 2.2 million trees. Assuming prices of about 94 cents per kilo of cherry, this means an additional income of 4.1 million per year put in the industry and for the farmers. Now, the biggest challenge has been achieving the critical mass. Paul has said we have trained 400,000 farmers out of the 5 million. So for the effect to really be seen, we need more farms to adopt stamping and to adopt other best practices. And that is what TechnoServe is doing, working with farmers and our partners to encourage more farmers to stamp, because the more the farmers stamp, the more the effect is felt across the value chain, and the more the farmers are able to appreciate their work really in coffee farming. And yeah, thank you.
Thank you very much, Catherine. Very much appreciated. I'll put my video back on. We have, as I said, a bit over time. We actually don't know what's going to happen at 4 o'clock, so it might be a very, very brief cutoff. So we just jump right into the first question, which is about the current Red Sea situation. I'll read it out to you. I think this is a question for Phil or maybe for Abdullah. The question is, can you provide insights on the impact of the situation in the Red Sea on the shipment of coffee from Ethiopia in the coming months? Are the panelists expecting more shipping lines to drop the port of Djibouti? And what about container availability? Maybe Phil, you want to jump in?
Yeah, I guess anyone involved in trying to ship coffee out of Ethiopia is pretty aware. Maersk has stopped calling at Djibouti altogether for the time being. I believe that MSC are currently the shipping line with the most vessels coming in. It is hard to get bookings on MSC vessels. Container availability has always been an issue in Ethiopia, continues to be. The shipping rates I got yesterday had $1,500 per container added on for the risk. If you imagine a 20,000 container ship, they're adding $30 million per vessel to call at Djibouti, which is pretty high premium. It's very hard to predict what will happen in the next 2 months. It does seem, whilst Maersk has stopped calling, MSC has put additional services. So I believe that shipping lines will continue to try to serve the port of Djibouti. You will have seen in the news that Ethiopia signed a deal with Somalia to have Berbeti, a new port, effectively assigned to them, to their sovereignty for a few years. That may take some time to go through. And the backup plan would be to ship through Mombasa in Kenya. So you can send coffee south from Addis. It's a longer journey, more expensive, but then it would be able to ship down past the Cape.
Have you seen already shipments going through Mombasa?
I think we've seen some imports of containers coming up from Mombasa. Yep. We haven't shipped anything ourselves to Mombasa, and I don't think anyone really wants to unless they're forced to, because the extra costs are somewhat prohibitive. So I think we've seen enough instability across East Africa to know that it's, coffee finds its way out, and will continue to do so in my view.
Abdullah, any comments on this, on maybe both the port of Mombasa and also the current situation in Djibouti? What are you seeing as an exporter right now?
No, I think Phil has explained it very well. I don't have too much to add there. But what I'm positive about is that MSC is rising to the challenge and trying to serve. And so I hope that will be a signal to the others that the business can continue and probably yes, they have to do risk management and maybe with the pricing, but if they do serve, there are ways, slightly longer journeys, but I think it can be managed.
Great. A question on another hot topic on EUDR in Ethiopia, which we mentioned Ethiopia being a very unique country with millions of smallholder farmers, making it maybe a bit more difficult. Is there anything, we're talking now to a European audience, is there anything that the European stakeholders can do to support Ethiopia and maybe the CTA or any other governing bodies in order to implement EUDR? Abdullah, from your point of view?
Yeah, I think there was a flurry of activity the last few weeks. There was even a delegation that met with the EU commissioner and explained the fact that our situation with the 5 million farmers is not a standard textbook type of situation that can be resolved in the way that they expected. And therefore, being open about other modalities was very important. And we were all very pleasantly surprised that the response was, okay, present to us your proposal and we'll look at it from the Commission. So I think the next best thing is to go into the territorial approach. And our government is looking very closely with the EU in terms of funding of implementing these, and funding doesn't seem to be going to be a big issue. And therefore, it's about presenting the right modality of answering the question without actually going to the very minute detail of mapping every farmer.
Okay, great. By the way, we're a little bit over time. I hope that's okay with everybody. Just a couple of 2 or 3 questions more.
Max, I might just add to that there's been a request for a year's grace for Ethiopia, that the implementation of EUDR may be just delayed for Ethiopia.
Yeah. Thank you, Paul. And Catherine, anything from TechnoServe perspective to be added on the EUDR issue?
No, I think we can leave it there.
Okay, great. Then more so on the trade, we have another question being, what's your view on the minimum price? Maybe from the traders and from the exporters' view.
Phil first.
Yeah, I think at the moment they're actually fairly sensible. The minimum price is currently published. I think when differentials dropped off very fast last year, it was interesting to compare Ethiopia to Kenya. But Kenya, with a weekly auction, had to find a level at which somebody was willing to buy their coffee. So Kenya differentials actually dropped to +25 when Colombians were still at +50, because they were forced to find a market in the vacuum last year, which helped Kenya because they managed to catch the market, the world market, while it was higher. And Ethiopia kept its minimum prices very high. You can generally buy at the minimum price most of the time now, for most grades. The danger is that there are 2,000 exporters, and if you go out and ask for the minimum price, you'll have 200 exporters who are happy to sell you coffee because they want to get dollars and may not deliver, or may not deliver the right quality. So I think they are sensible indications as to where trade might be done or could be done. But if you are a roaster, I would just ask you to bear in mind that if the traders are buying at the minimum price and selling to you, they're taking the risk of quality, delivery, and hedging and everything else, and therefore maybe allow them a little bit of space between the minimum price and the differential you're expecting to pay. But given that it's fixed once a week, you know, Jimmer 5 was at 30 under last Friday and 20 under on Monday and Tuesday last week, and then has just dropped to 31 under and is probably 26 under as we speak, simply during this call. So
yeah, as a trader, I can second that, by the way, to give a bit more room. Anyway, anything, Abdullah, you want to add to this?
Yeah, I think the minimum price, for many years, we went without a minimum price in the country. And the government's efforts are really to maximize and make sure that a fair amount of foreign currency comes into the country, and not let's say, be beholden by cheap sellers who don't know the pricing and end up selling coffee at half the price, which has happened before. and then all the buyers expect to buy all the unwashed coffee at 50 under, which is not a reality. And so the minimum price does protect certain conditions. It doesn't get it perfectly right, but as Phil mentioned, for the savvy trader, it's a matter of timing. And this has always been the situation in Ethiopia for many, many years, that the savvy traders would be able to get the right differentials. Otherwise, we wouldn't have been able to export 300,000, 250, 300,000 tons a year.
Great. And then one last question before we wrap it up. I hope that's okay with everybody. If you are short on time, you can, of course, just leave. The question is, we talked about Ethiopia again being not allowing any multinationals in. So the question is, will multinationals be allowed to export from Ethiopia anytime soon? And especially given the difficulties in the financial sector of the country. We had another question on the financial situation with the potential devaluation of the birr, but let's focus on this one first. So the multinationals, should they be allowed in, and will they be allowed in? What's your point of view, Abdullah, as not being a multinational?
No, this is a politically sensitive question, but I would say, having been part of the African Fine Coffee Association, and we hear what's happening to our neighboring countries, and there's very extreme views, let's say, about the effect of multinationals. Of course, there is definitely positive aspects of that, but mainly the big fear of the local players is that once the multinationals come in with their usually cheap financing, that it would really clean out the local operator from the system. So I think that's the big fear. From the point of view of our government, I think they see trading as a non-investment. It's a local operator. It's buying and selling. There's no value addition to that. So I think the reluctance of opening up to multinationals is that it would take the livelihoods of local operators, because if you open up the coffee industry, then you'll open up small shops and all kinds of things like that. So it's looked at from the aspect of value to the local operator. But we can't forget that the system is totally open for a multinational to come in and get investment land and plant or set up a roasting factory. That's totally open for multinational to come in and do.
Great. Thank you so much. We make a stop here. If there are any urgent questions that haven't been answered, please send us an email. I guess our panelists are very happy to answer them. Now we're 8 minutes over time. I hope that's okay. Thank you everyone who has joined. As I said, the presentation will be on YouTube very soon. Thank you, Catherine. Thanks, Paul, Abdullah, Phil, all the others for joining, and wish you a great rest of your day. Bye-bye.
Thank you, Max.
Thanks.